oingo boingo. And so on and on, the markets are churning. And we got a question here about the trend of doing the contest. I guess paying a fee to do. You got to pay it up front. It looks like all these things are pay up upfront fee of maybe you plop down $300 and you got 3 months to cut out. I don't know how much you're trying to make. So the big question here is how much you're trying to make. And the only thing missing from the question is that, I guess, get you to the point where you make a decision is all these elements. You have the fee, which is probably like the spread if you're just going to trade your own account. So the other side of the spectrum is, I guess this is like working for a firm indirectly because, well, you pass the contest, you can work here. You just have to train for the test. So if you know that they only let you trade, I'm assuming they're not let you, I don't know what they call a loss and a drawdown because, geez, what are we talking about here? $100 a day or a percentage of the account? So those are two different things. So they may put a limit on your percentage drawdown, and they're not giving. So if you're just going to say I'm risking $500 a day, and if you have 3 losses in a row and 1 winner, I don't think they want you to work there. They're probably looking for somebody that can do a 75% win rate, which means you're wrong on one, and the other ones are going to be winners. One's going to make just a little bit to pay for the fee or the spread, and the last two are going to be a scaled out exit of some type. So you have to have good money management, just like you have to have separate stops for each ticket. I'm imagining that they're looking for somebody that could trade like a 10K on one ticket, but I don't know what the frequency. I've seen it where they're like, I don't know if it's true, but I've seen it where they're saying, well, no, you just can't fucking put a bunch of tickets in there. And it's just like this bullshit if you try to trade in the United States. They got it rigged. Okay? It's like fucking, why would you bother? The spread's wide as a fucking, elephant. And they're telling you, I feel like, fuck, just trade your own account. I mean, I guess if the fee's $300, just trade your own account. But this presupposes you want to write your own music. So if you want to play their music or play within their, like the song has to be 3 minutes, People don't want to listen to a fucking 40-minute rant, Yeah, I know that's why I'm broke. Thank you very much. But, if you have so if you could trade the market, like they say, people that are trading it, they could talk about it or not talk about it. People seem to think that the people that can trade, if they're talking about it or they're selling something, that they're a fraud. Not necessarily true, because some people, because you have to. If you're getting older, you would probably start charging. Hopefully your fees go up because you get a bunch of bullshit to say that people like, a lot of stuff that these metaphors transfer over to trading. So whatever you do in the real world, so to speak, because the pace of the market is so nonlinear that it doesn't fit into what people want that's why people use the moving average, because they want this, like, could you smooth that out a little? Like, that's fucking ridiculous price action. And so the price action is the problem, but it's the solution in the sense if you trade a style that accommodates, if you're going to trade the spike, or you're going to be a so-called trend trader, not that that's what you're talking about the trend here, but you're saying is there a trend in people going, yeah, I suppose I was just talking to somebody today about the, and if you've seen this phenomenon, this is somebody came across a ball bearing once and must have dropped it in a factory, and they go, well, let's make a spinner thing about that. And put 3 spinners on a spinner, and people just fucking, masturbating with this thing. And I'm like, wow, okay. I went to the register once to pick up my food at the very cheap restaurant, so maybe that's when the spinner came in. But I'm like, wow, it's some fidget spinner or something, some kind of like concoction of hardware, like having this couple sprockets to play with during the day. Get bored real easy. But yeah, that is a question because it depends if it's your personality to show up at like a gig like that. Okay, so we need somebody to play the key of A and then the key of B, and I mean it could blow your. I mean, if you look at that one, what's that show they made about it, and the one guy's sitting there shitting his pants. And the problem is that if you're gonna do something that's really um, focused, you're probably gonna want to be alone. Now, if there's other people, well, you're doing it alone, I suppose, remotely. But in these prop shops, like a real prop shop, people like it becomes a problem because people are like, "Wow, what are you doing, man? I'm just waiting for my entry. I'm just waiting to enter the market." But it's a 24-hour market. Is there a trade every second? I suppose, in a way, like if you don't mind getting in and out of the market, because if you get in, there's no fucking way it's going to go like say 80 pips in your direction on the euro dollar in the next 4 hours, just out of nowhere. That'd probably be the news event, and it maybe already went down 40 and it's coming up 80 the other way. So have you ever seen the news come up and see it go just ratcheting down and then comes up and then pauses and then it rips up and takes out the high of maybe the day or the week, and you're like, what the fuck just happened? And I would say, well, it's just extreme. It probably either drifted into that zone or it collapsed. Usually the collapse and the retrace gives you a candlestick that looks like a hammer. And if you didn't, so you can either get in at the end of the hammer and say, wow, that's fucking bullish hammer there. Let's get in. Or you say, that's a bullish hammer. I'm just going to put pending limits all the way in this. I'm assuming these guys here, this thing you're talking about, these prop shops. If you're going to put them in, you say, well, you're only allowed to have a 40K on 4 tickets, buy one at the market, and then just put 4 tickets below. You have 5K or $50,000 position. And that's how you trade every day. You're just hunting for a currency or whatever they're letting you trade there that you think is going to do that fucking maneuver. So scenario-based trading for me, I would do it like that. But I don't know if I would. I'd have to test that before I showed up and paid them. Basic trading other people's money. Your money's not in it. You're just okay. So the other way to go there is you could do your own version of that. Just open up a fund and just trade it and have other people put money and you be the manager of the fund and you taking the fee. Or you could just be a private trader that's just neurotically pulling the trigger every time you see a couple pips down on the 1 minute chart, because it's a very fast market. You could actually do that trade. It's down like a half a pip. Did you see that pullback? Of course you are hitting that. Now you need a fast execution there. You need a really low millisecond connection to the server, and you're going to be just hold down the button and it's maybe it goes in a rapid fire, just buy. Now your broker has to be able to accept that speed, and that would be the high frequency. You're chasing the market, it is skimming it, at a high speed, and you can make money like that. So there's a million fucking ways to make money. Now, I'm assuming that I think some of when I heard about these things is like, okay, by the end of the month, man, you got to have at least so many trades. If you didn't do 10 trades, or they're forcing you to trade, come on, man, get out there and trade. So that's pull the trigger, damn it. And I think it's going to be how much your ratios. I don't think they're counting dollars here. I think they're saying, well, how many times were you right? I would say the best way to be right or have a chance. So if you're making 2 losers a day and 2 winners a day, but you're making more money on the winners than the losers, then it's going to matter, the money, right? So there's just how many things did you shoot at and hit? How many things did you kill? So it's a kill, it's a win. What I'm doing is I'm using a gun that would be illegal, I suppose. I'm going to 100 bullets. all market orders. Then 100 limits, which are all like traps, like bear traps or squirrel traps, depending. The big giant plunges in these markets. I'm sure you can see by now all the fucking videos I've done. If you look back, you're like, wow, that fucking wick is about 100 pips on that yen. Holy fuck me. Then it comes back, either retest that, God knows when, the next 8 hours, 8 days, and then the motherfucker goes dead. And then it rips the other way. Now, you can put a moving average on that, and you can say, well, we're going to get this thing, just right. And so I'm trading baskets like this Ryan Brown guy. So, right, I suppose if you wanted to, the closest thing to what I do is this Ryan Brown robot where he's going against the market in several tickets. Oh, probably 50Ks. But I don't know. He's actually got it where it's kind of martingaling in, so maybe it's buying 13K, now it's going to buy 18K. That is completely different. If you've ever tested that scheme, you will see that when you're wrong, the count's gone. It doesn't even, if you test it all the same size tickets in a broad range, you'll see the results come back and says, okay, you haven't blown up the account, but it's kind of slowly getting chopped by the spread and the bad trades and this. I'm talking about a static robot that just keeps dropping regardless. There's no filter saying, whoa, it went down 40 pips. Now, that's when you have that is what I'm trying to construct, is the limit bot that's going to respond to, oh, we're down 300 pips. I have a robot waiting for that situation, and he's just going to keep looking at the market until he sees it. And then he pulls the trigger. But now his frequency of trading might be, oh gosh, wait, how long are we going to wait on that trade? Like, it's going to be maybe three days, or, well, I can't do that trade, but every day or a week. Now, if you put him on you put $1,000 in an account, you let this thing churn away in a few currencies, and you check in it every 3 days or 12 hours or something. It's going to take at least 12 hours in a swing situation to make the 50 pips, the 40 pips. I'm presupposing this is what we're going for targets, because they talk about here your profit target during the evaluation process to become a funded trader. Now, this funded trader, so it's like, well, okay, can you drive a race car? Great, we'll get you a car. So, I don't know, hopefully you're doing it at home in the privacy of your own home, so you can focus and tell everybody, get the fuck out of here, or go underground with a hatch on top, build one of those underground survival caves, a storage unit, and then trade down there. But, if you're into a long, you don't mind being in the market for 12 hours or 8 hours or 24 hours or whatever, because those are very dramatic moves. And I would say that's, for me, the outside range of that trade. Now, I remember one thing that they won't let you do is hold stuff over the weekend. So they're not going to let you hold a position over the weekend. And I suppose in a funded account, there's no fucking way they're going to let you hold, like no people are going to put money in there. But you could just do a PAM account, and you could be the person that's you're trading it, right? But hopefully you're winning, but you're performing. If you're good at it, just fucking open a PAM account and have people pay you for your good trading. And you're in the same fucking account with them. So you're in it, and you're the captain of that account. So just open a PAM account. But it depends. There was one of these prop houses, like a real one, I suppose. You could show up. I think you show up and actually rent the space. Now that becomes a social thing, and you got to get along with those people in that room. Otherwise, if you have some crazy trading technique, which I do, I guess, some people are like worried that somebody's going to copy it. Well, I wouldn't care if somebody copied it. I mean, it's not like, oh, the markets are going to be destroyed. We start, two people on the planet out of how many fucking people trading in forex, where it's like $1 trillion going through there. But it's really just be triggered. I mean, if you look at all the price action, it's just triggering price zones. It's ripping back. It rips up. It rips down. It goes quiet. It rips up. Rips down. And the ultimate robot that makes the best amount of money on this particular pattern. If you have this is the shape. You see, this is a Elliott wave, the perfect Elliott wave pattern. Now on the 3-minute chart, I see it. I see it on the 6-hour chart. I see it on a monthly chart. I mean, it looks exactly the fucking same. The only difference there is, wow, is that a 300 pip pullback on the wave? Wave 2 is, I always like to get in just at the beginning there. So you have the first bounce, the pullback, and now comes wave 3. So I always want to trade the first pullback. I always want to trade that one. But the problem is, on the 3-minute chart, the spread's in the way. Spreads, it's like, ugh. On the 1-hour chart, it doesn't show up as very often. But if the robot goes and looks at the weekly chart, the 3-day chart, the 45-minute chart, the 38-minute chart, now the robot's going to look at all that shit. It can do it now, right? Computers are fast enough, I hope. This is what I'm using. It's so fucking fast now. I feel like, well, I don't know. Windows still sucks, so what's the point? But it's a comfort level. If you're going to sign away up or sign into these things, I just feel, for me, the pressure of performing. It's like, okay, so I understand you can fuck like a rabbit. Let's see you perform. I don't know, geez, guys, could you leave the room? So it's like that, and then they're gonna, well, we're gonna monitor you. Are you keeping up with our requirements, our specific requirements? You remember when you signed that thing, our digital signing, well, you still sign it, right? Come drag you away in the middle of the night. Why are you taking me away? The drawdowns. It wasn't the daily loss that bothered us. It was the drawdown. And then you held them over the weekend. You broke our requirements. Maximum allowed daily loss. That's a great name for a band. And the funded trader. So yeah, I know that's well, yeah, I guess so. But I don't. If it's got real money in it, I don't think it's a demo. So in a way, I mean, very tangentially. So the mindset of trading the demo is definitely different than the mindset of trading your money, and it's totally different than the mindset of trading somebody else's money. I can't believe that somebody could treat those 3 different situations with the same feeling. Because some people are sensitive to. Some people, I guess, a sociopath. Like, I guess the crazy person's like, yeah, I'll trade your money. Fucking, I guess I'm good at this. Or the person that just doesn't question anything and everything's fine. Then I'd say I'm going to say, well, so where do you put yourself in this spectrum of performance? I don't know. It's kind of a, and then you might be really good at trading. Then you're like, I'm doing a contest, and you just get nervous. So I think it's better in a way to take the 300 and just trade like $5K a day. I thought it would take you a long time to blow up that account. Really, it would. I mean, this is with a 20 pip stop on each ticket, but at different price level entries. And when the market goes into what is like a 8-day low, it hasn't been at that price in 8 days, and if it hasn't been there in 8 years, these are the prices when like, man, this thing's chopping into these new lows. It's just the most giant vacuum. Really, it's like just falling into a hole. I mean, I look at it as like a metaphor, is just like just getting sucked into a black hole. On the downside. Now on the upside, I figure, well, it's been held underwater, and it's going to, like a balloon underwater, it's gonna, under pressure, it's gonna come up and pop up. So when the market's going to spring, there's probably about 40 words you can put in there for is it bouncing or is it retracing. The same for me. The bounce is the retrace, and what is the speed of it, and what is the time length of this retrace, and can I handle the drawdown? Of course, for these people, they probably say, "Well, you reached a threshold, you got to tap out," and that's the other thing is that it's kind of. I think typically they're forcing the money management on you, like because they're saying, "Well, if you're losing like that, they don't want you to be like a samurai trader where you blow up two accounts, but the last account you take 10 grand to, let's say, $400,000. You go from 10 grand to $400,000 on two accounts, but you blew up three. So they gave you five accounts, you blew up three, and you won on maybe one. So you blew up four accounts, you won on one, but you made just fucking outrageous money. You went from 10 grand to 400 grand. And you did it in like 6 weeks. People are like, wow, that's pretty good. Well, I mean, they'd be fine for you, but for them, they'd be like, you are a reckless motherfucker. Like you started with five $1,000 accounts, you blew up four of them, but the last one you ended up with 8 grand. I don't know. I wonder what that is for them, and I wonder how many trades you're allowed to do a day. And they may not let you trade more than maybe 1% of the account or something like that. But I guess they're looking for people that can just make really good decisions, and it's very conservative. If you're making, that's what people say, if you can make 30% or something, you're doing real well. But 30% of $1 million, you probably are doing really well. But if you only got 10 grand in the account, you kind of got to make a little bit more than that. Because the harder you work at it, you should be making more money. And you'd really have to trade your ass off. It's a fucking it's work, But the way to get rid of some of the work is just place pending orders out there and just say, I don't know, maybe it goes down there. If it does, I want to buy it. I knew I wanted to buy low. It's so fucking crude what I'm doing. It's so stupid simple. But that's the problem. It's too simple. People want to say, well, is there some indicator that would indicate that dude, we don't know. You just put a bunch of shit out there, and if they tag it, if these goobers bite, you're just going to put about, it's like, I suppose it's illegal to go fishing with fucking 85 hooks, a net, radar, whatever fucking, I can just see fish everywhere. I just fucking shot them. I just cleared this pond. Thank you very much. See you later. Bye. I don't think they'll let you do that, but you can do that in trading. You just put a bunch of fucking tickets down there, and the market spikes into that, rips back. You're like, there you go. Maybe you got a couple. Maybe you got out too early. If you lay all those fucking pendings out there, you never trade the market. That's completely different trading than pulling the trigger at the market. So you do have to pull the trigger at the market, I believe, about 20% of the time. It's 20% of the time the market's trending. If you can jump on the trend, you can trade it. But in order to do that, I don't know. I guess they're not going to let you trade in this kind of prop house stuff, right? They're going to want you to trade probably during market hours or something. I don't even know. Maybe they just trade the NASDAQ. And if they're doing that, yeah, you can't get crazy. You can't have a bunch of, so that's the parameters. I say just trade the fucking demo and practice. If I was going to do it, I'd practice their requirements. And I thought if I thought I could do it, irregardless of what's going on, if I could do it. If I thought I could psychologically not be distracted by their what they call it, evaluation process. During the so they're giving you this time window to do the evaluation process. I think that's really the kind of like And there the problem would be is how long is this valuation process? And if the markets are like not doing the pattern that you find easy to trade because uh, people have a sense of where their entry is going to be. So if you're going to use moving averages, right, Ikamushu clouds, and all that bullshit, you know when you're supposed to get in. Now you may jump the gun, which I would certainly do that. So that would be my market order. I'd say, oh fuck, look at this trade. I got a uptrend. Let me buy one at the market. But then I would just come in with buy limits below because it'd be like, dude, if it's going up, you say it's in an uptrend. Yeah, that's right, I did. Well, on the daily charts, if it's in an uptrend, because every candle's been going up for the last 8 days, then fucking A, you just put buy limits below, and when it pulls back during the day, you get picked up on tickets. It's the dumbest shit in the world. You can't get anybody to do that. I get the robot that now had the robot do that, but I'd have a robot that's okay. We are currently the closing prices right now are above the 5-period moving average. Every down candle, while price is still above the moving average, just buy at the market, and it just keeps doing that. And the way to fine tune that is if it drops 40 pips, you buy one at the market with a 40 pip stop. If it drops 50 pips, you buy one at the market with a 50 pip stop. So you always know, at least in your mind's eye, mine, what's left of it, that when the market's pulling back like that, I just know I could just look at the chart. I don't have to look at the terminal. I can see, oh, look at, I'm probably getting, and you can see the tickets. I turn the tickets on so I can see them, the price levels, and I just say, oh, look, we're getting filled on this shit because, yeah, every hour it's going to drop 25 pips deep with a 25 pip stop to make 25 pips. Now, that's just the starting bot. Though I know that's the baseline. Then we have good ratios and bad ratios. And then the next fine-tune point would be tell the robot only to trade 30 to 45 pips for this one script to launch, and it's going to be, I guess you'd have to maybe have a 2K in there. Now you go down a whole nother tangent point out into making iterations of a robot that's going to buy a 2K, a 3K, a 4K, and when it pulls the trigger, it is getting that same price. I suppose maybe a little different fill. Maybe you could make it so it's got a little delay between each request for a market order to get filled, and then each one has a different stop and a different take profit. But inside there you have some outlandish ratios and some just bad ratios, inverted ratios where you're risking 20 to make 10, risking 40 to make 20. That'd be the baseline for me, is I'm risking twice as much as I'm going to make, but probably get filled and probably have a higher probability of making at least that, offsetting the losses from whatever. I'm sure these prop house guys are going to say, well, you're kind of really in a losing streak, or you're bleeding streak, or you're still holding a drawdown. They probably don't let you hold too many tickets. I think you have to get rotated because here's the thing. These fund people, they don't want to pay all that fucking commission. And they do really, I suppose they're using a different thing than a retail broker. Well, retail brokers cost a little bit more for the private citizen, but at least you have total control over the situation of what you're going to get in and out and how much money's in the account. So those are the bonuses there. But, you still have to, I suppose, trade well. That's what they're looking for. Classic, right? Yeah, so the other guy said, yeah, change the game for me. Yeah, well, I mean, yeah, well, we're all little guys, so people complain about, well, the big guys, little guys, but, nobody even notices us in the market, and it's not like, they're going to try to copy our trades, right? So the void fill thing, yeah, I do have it turned on. I was messing around with this other thing, which is kind of like void fill, and it's sessions. It's called sessions. And it's just really like a 4-hour candle is really a session. And this is the 4-hour, I'm sorry, this is daily euro dollar. And here we have, I'm going to put some buy limits in. I'm going to double click it right now. So this is like tablet stuff here where you just if I'm driving the car, I can hit this button and I can launch buy limits and stuff. And because I know exactly what the script is, I've run it a million times. I'm gonna buy 5 pips deep, buy a 3K here for a half hour. It looks very deep, far away. Now this is doubled up down here. It's gonna double down on the sell-off. And I can wait every 15 minutes, this 5-minute chart, every 5 minutes is down. I just buy. It's just stupid, right? But I haven't been doing that because I was talking about the comment thing. So this is the problem with the trading is that, yeah, that works great. Now, if you kept on selling every baby rally, and I could draw a trend line here, by the way, you could just do these trades, you know. But you're like, dude, is it really worth it? I mean, the spread's like fucking, I can see it. So I can say, well, I'm going to put this trend line in, and every time it comes up anywhere near that, I'm just going to pull the trigger and sell. We've seen this trading style before. Here, bullish candle, sell. Sell. Why aren't people doing this? Well, it's a lot of fucking work, dude. You sell here, you got to put a stop in here. You sell here, you got to stop here. You sell here, you got to stop here. Next, also, you got to cash out of something. Well, the fucking spread is this wide. Dude, you got in here. Okay, to double your money, you got to get out. You got to get out here. You're in and out. I hope this is bigger than the 3K. This has to be a huge trade. Can you make money? Does that pattern work on the 5-minute? Yeah. You got to be in like a standard lot. I'm out, sell. I'm out, sell. You're fucking buy, right? Buy. I'm buying everything below here. But so my approach is, how about we do this? First get a beer, and just say, well, all the way back here. Let's go trade the history here. As soon as this thing goes up, am I going to chase it? Fuck no, because I'm not that guy. But I would probably have sell limits up here. I'd be like, dude, let's start selling this thing. In fact, the robot's going to jump on that and sell that big. This is my biggest sell ticket. Big stop up here, target here. We don't have to wait for that target to get hit. We can also, you know what I mean? We could have a sell with a target here, here, and here. So you're selling, and you're looking for this trade. You're thinking, oh, I'll come back to here, maybe take off then. Meanwhile, the limit orders are winning because I can put in 80% limit orders, 20% of the market. 80-20 rule. I sell them in here. Sell them in here. So this is what it has to look like if you're going to trade the prop house. You got to sell them in here. Sell them in here. This is, at this point, if all these fill, you're at like maybe 0.8% of your account. Right? I get to be on the conservative side. And maybe these tickets do get bigger. Like, so this is a sell a 1K, sell a 2K, sell a 3K, sell 4K. That's probably what it'd be here. So you'd be in like, 12K coming back here. As soon as this thing pulls back, in fact, you probably have to sell something here. I would take the whole position off here. If I was trading for those prop people, I'd be like, dude, 10 minutes down hard, get out. Especially, so if we still holding this ticket and this ticket, we're just going to have to take a loss on these. But you're doing good. You just made like 20%. If this is a 1K, a 2K, a 3K, a 4K, you took off 7K and you closed out these as losers. I think you just made about 20%. I don't know. You didn't do too good, but you're going to do it again. And you're going to sell here because this is a big ass move, just like this big ass move. Even though this was a break even, you just had to almost go break even on that ticket. So the 4K you made money, the 3K maybe you just kind of, but it depends. If you martingaled into it, and so there's, it's just the concept of doubling up or doubling down. You sell 1K, you sell 2K, you sell 3K, you sell 4K. 5K, 6K, 7, 8, no fill. Ready to fill all this shit. 9, 10. If you like to do the sobriety test on the side of the road, can you walk straight? No. This could be a linear grid. It just keeps increasing. This is a 13K, 14K, 15K, 16K. These never fill. This is just a loss leader at a sell limit level. At the same time, you sell this one at the market. I'm not saying this, but this is that pattern. Look, it's trapped at the top. Oh, Jesus fuck. Sorry. That fucking shit's running in the background of this fucking Discord here. Sorry. Oh, Jesus fucking Christ. Oh, it's so fucking loud. I forgot I had this shit on here. That's why I hate Discord straight out of the gate. But you're selling here. Sell. Because you're expecting this to happen. It's trapped and rips back, right? I'm expecting that. As soon as I see that, I'm already triggered. I'm ready to kill somebody. Don't forget, you could have limits. And here's where it becomes critical. The density of tickets here has to be higher because it's a quieter market. So if you're going to buy the plunge, you have buy limits sitting in this pocket. And this is like a mini martingale. You're going to buy, you're going to sell, you're going to buy a 1K, a 2K, a 3K, 4. But see how dense it is? The pattern is completely different. I mean, the thing's the same, but here's where the obstacle is the spread. As this comes down, you're not going to pick up, you got to really put them in dense, which means you got to be buying every half pip to get the same money. Not the same money, but pretty good chunk. Or you got to have to buy every tenth of a pip. So this is going to be 50K, maybe if it fills here. And you got to buy at the market. So there's 2 market orders, 3, 4 market orders, and just lay in limits here. As soon as it punches to here, you could take the whole fucking position off. Or you take half off, get out of the rest here. At the same time, you could be going against it. Sell at the market, sell at the market, really sell at the market, sell at the market, sell at the market, sell at the market, and the limits are filling. So the only enjoyment in trading is that, after 5 minutes, fuck these fucking fuckers. I sell here at the market, sell. I love this triple. This is 3 drive right here. You've heard of the 3 drive. And then inverted hammer. Oh my God, spinning top. That's fucking amazing trade. Inverted hammer here. Now, a robot, after the completion of this, would be, let's sell that. And the robots that I'm thinking of, MT4 doesn't make them. It would sell here. And we have a specific robot. That's the only way to do it in MetaTrader. See if like 1,000 robots, but one's designed to, when it sees this pattern, it sells here at the market with a stop right on the wick. So after it sees that wick, it triggers a robot that has that particular stop. And it's only trying to make a break even to here. I'm assuming no spread, which means you got to make it to here, you get out. This is break even. If you put spread in there, break even, so you're looking at this stuff. Beautiful entry here, but even better on limits because I don't have to work so hard. I didn't know you could trade on limits, to be honest with you. Enter on limits. Here's a lonely wick, so you would start piling in here. And this is going to be a chunkier trade than this drift down maybe. But this is a great fucking run, isn't it? So that's why you want to buy at the market, buy at the market, buy at the market, buy at the market. Also get the limits because this is the obvious structured trade. This is the cave, so to speak. This is where the cave falls in. You know, the pressure. I have to buy at the market here. It's about 10:30 almost. I'm buying the euro into the trying to take out this high. So this is a nice, interesting sideways thing. You can trade it out. Now the sellers are selling. You see that? Now that we're up, and you've got a minute and 20 seconds left, I guarantee you in the next minute and 15 seconds, if it's up here, if it's anywhere above this, people are selling. Not everybody. And you'll see it jerk around. It could come ripping back to here. Now, I don't have a script written right now on this one that I could do the trade I want to do, so I'd have to hand drop my limits on this particular trade I'm thinking of. So here's a double click for pip deep. So right there, it's getting at the bottom of the candle. It's not tight enough. Even on a trend burst up like this, we still got 30 seconds left before it updates that candle. So I'm going to put limits in just under the current price. I got a 1 minute chart, otherwise I won't be able to see the tickets here. So I got 30 seconds left to get these limits in. Put them right up against the edge of the market. Okay, this is a 10 pip stop. 15 seconds. I'm holding the drop just below the bid here. Gotta be careful, because if it moves below and you drop it, they'll become sell limits. So that's why you don't want to risk too much on each trade. I'm risking $6 here because I just dropped that. So I'm buying anything that drops into this big rally. I'll buy anything it pulls back because I want to buy more of this thing. I'm already in it. I'm in it to win it from a long time ago. I'm like, I got it today. I got here this insane new low. I don't know, some bullshit news came out. So this is a low frequency trading pattern here for my technique, is to buy anything below this wick right here in that box and cash out of half of the position when it comes back to the top of the box. And here comes the new day. So that was a beautiful hammer. And it even tagged this price, so which is very important. The blue indicator is showing you right there. Well, it already took this. The blue indicator was here. That thing, the void fill was here. Actually, I'm counting that wick because that's the one that makes it. The blue line was here at one point. Let's zoom in for a closer look at this. Let's max zoom in. You can't even see my limits because the candle covers up my entries thing. So you have to go a 1 minute chart. So we have to have 5 more 1 minute candles to make a 5 minute chart. I know it's hard. It's tough to wait. But this is one of those things. Look, no pullback yet. So this pullback, I would buy at the market. If I wanted to chase it, I would have to wait 15 seconds. If this candle closes down, buy. Because you're in an uptrend, right? So yeah, of course, but if you're buying 5 standard lots, I hope you got some buy limits below you to cover the fact that there's no fucking way you could be right about every trade on the 1 minute chart. Like, you can't just. I guess you could, right? After every minute, you could have bought every fucking minute, and you're chasing it. You're making money. You're pyramiding in, but this thing has to rip back. Doesn't have to right now, so that you should have bought that last one, and that may be the only buying opportunity you're going to get. It may rip, and it looks like it's going to take that, but then watch the sellers come in. Let me predict where they're going to sell. Let's just pick this shelf and this whole spot. Would you sell there? Would you cash out of your longs if you were long? I mean, is that an exit point for you? Is that a profit-taking zone? Or are you going to put new sell limits up here and start thinking about going the other way? Well, I'd consult the 5 minute chart and I'd say, oof, I don't think so. I don't know. But look at this screaming up. So this is the thing. If you sell that, that means in 5 minutes you got to sell that. And if it pulls back to here, you'd sell a 1K here and a 2K there. You keep selling more too. Each time it goes up, you'd have to sell more, which is totally against most thinking. That's stinking thinking, son. You can blow up the account doing them kind of trades. Yeah, I guess if you put on giant size. But look how beautiful this one worked out. You can't tell me these are great fucking trades. It's really a big, you sell a bunch. It's hardly up. Sell a little bit. Sell a little bit. Sell more. Well, this guy, if you held down to here and you had a stop up here, and this one has a take profit here and a stop up here. Well, I got stopped out. It's not a very big one. And this has a tighter stop. And this has a wider stop. But this is a bigger ticket because every time you go up, you sell a 1K, you sell a 2K, a 3K, a 4K. The other way around that is that you build a position on the south side that looks like this. Sell a 1K, a 2K, a 3K, a 4K, but the stops for these things are like the stops up here. This guy's got to stop up here. This guy's got to stop up here. It wouldn't be like that because this it'd be like this. I just didn't want to make it more complicated. On my robot, it's going to look like this. I have a series of robots. This is just what one robot would do in this instance. Let's sell 1K at the end of the 5 minutes with a stop here and a take profit here. Let's just say this one sells at the market and it's got a stop here and take profit here. Just your break even starter kit. When the account gets bigger, maybe it sells a 3K and on and on. When you see this little up candle, it's got a stop here, which gets stopped out. And a take profit here because it did this wick here, so it took out this thing. But when this ticket came, and this is why my robot would win, it sells here with a stop here based on the amount, and it has a take profit here. Now these are all break even. This is starter baseline for the array of bots that I will build. Haven't built for me, but just give me the fucking code where I can put a ratio, like I can say, well, I just put hard numbers. If it's up 10 pips, we got a 20 pip stop to make 10. That's the bad ratio bot running in conjunction with the break-even bot running in conjunction with the risk 1 to make 2, risk 1 to make 3. 4 robots on average attacking the market at the market trades. See, now you would have sold this big. You sell this. You're either going to sell. Well, there's several ways to do it. Say you sell a 5K because it's up 5 pips, but you only sell a 3K because it's up. That's another way to approach it, and that would be eventually where it would go because you can't get out of 5K. You can on the exits if they're chosen. But if you decide to dump this position and say take all profits on that, it's going to take a while to get out of that trade. If it zips through the predetermined exits, it just clears those off. I don't think there's even slippage on that. There's really no slippage if you say take all profits. There's probably slippage on maybe the take profits. I don't really pay attention. I'm probably losing 10 pips every fucking minute here, typically. But there's always, I'm giving the market a lot of room, like, yeah, so, you get smashed around in these markets. You just expect it. It's like bumper cars, It's like driving your car. And typically people don't think of driving somewhere and showing up and hitting shit and smashing into it, but it does happen. And when it happens, it's a freak show for me, for my brain. But that's happening all fucking day long here on the 5-minute chart. So just deal with it, right? Find a way. So like I said, the only logical approach to this shit is to have a scheme where there's not a question of what the trade is. You've already decided that if the market's up 8 fucking pips, you're selling at the market with a fucking 20 pip stop. Or are you going to do, which is the preferred thing, is to say it's up 8 pips, selling 8K with a stop here. but they're going to stop you out of that. Okay. Here it's up not so much, and but you have to figure out what is that number. That's too tight of a stop. You might as well just sell this at the market, that at the market, and have some outlandish hard stop up here, and know that, okay, if the market, this is 20 pips from here to here, I want to trade a 20 pip range. Well, here's fucking 20 pips from here to here. You could have done that trade. It meant you have to get down here in the sweet spot, and here you would put a 10K, a 10K, and a 10K with a stop like that. Each one has its own slightly different stop. And you have to ride this whole fucking thing, because you need this trade to offset these whipsaws where they're, yeah, you know, I gotta stop you out. Fuck yeah. I mean, if you're gonna not get the market enough room, but if I get stopped out of 2 tickets out of every 10, that's really about as good as I could do. 20% of the time I'm losing, or I'm in a drawdown. And I think the prop firm would let me trade there if I was down 20%. But that would be very conservative trade. Actually, it's easier to trade that way. I mean, building a position at the market's a lot of work. Like, you know what I'm saying? Like I've got to pull the trigger. That's why I let the robot do that dumb shit stuff. It buys here because it's down. X pips down. I would just say, I would set this stop level. I'd pick a robot that I know. 20 pips stop here, right? There's the 20 pips. So here, so selling. 20 pips stop never comes near it. But we have to take our 10 pips. See, that's why you have to risk 20 to make 10, because if you risk 10 to make 20, they're just going to keep chopping you out. And if you start martingaling in. But here's where I guess it's where you just missed getting hit by a fucking truck. If you've ever been hit by a truck, you can't compete. You know, the trucks. I got hit by a truck 2 days ago, and the guy's like, "Oh, I didn't even feel you." Yes, I know, but the whole side of my car is gone. So yeah, you know, I wish I could say the same for my car, but thanks a lot, motherfucker, backing up at 15 miles an hour. I thought you guys come earlier. Thank you very much. But yeah, this one that you sold here, I'd say with a 10 pip stop, which looks like this here, 10 pip stop. You may have to say, well, here comes the other robot. He's buying here. Now you're in a hedge, but you got to take profit for this guy up here, and it's running an 8 pip stop. So that robot's actually making money, and all those robots are triggered by all these things in my system. And 5 minutes isn't bad. Now you can have a 15-minute robot that looks at the market every 15 minutes. I would lay that on top of the 5-minute bot, and then I would take the time to make the comments very accurate so that I could do a spreadsheet analysis of which time frames perform the best typically, and I would just stick to that. And say, okay, that looks like a 15-minute chart. It's a little lower frequency, but it's making more money, you know? Because, yeah, the 5-minute here, you know, I'm just saying it because I can call out all the trades and say in the concept of what I'm after here that these three monster rallies show, they jump out at me. And if you only traded that on the 5-minute, it would be like the 15 in a sense, because you only have sell. Now this one, you're getting killed on. This one was a break. This one you had to get out. Did no fucking money there. This is the only winner. And it only made this much. And you have to have a stop up at least like this. You know, so it's not. And this one, you know, currently underwater. The market has to keep tanking. It really has to take this out. Now it's 10:30 at night, so the obvious trade here is to start placing buy limits down here and put just a ton here. You may when the news comes out tomorrow on the jobs report, the market could be spiking into here, so I would lay these in for 12 hours so I wouldn't have to ever think about it. I do have some 12-hour scripts on this platform that I published in the link below, so it's a lot of shit in here. You just have to test drive it on the demo. I wouldn't recommend just jumping in here. Here's the obvious. So here's the buy limits on a double click. Now this is very tight. This is 2 pips below. That's a 4K. And see what the stop looks like that? Now that's a particular robot that, let me emulate what the robot would do here. He'd see this move, and he would attack this move here. If it was, he wouldn't pull the trigger on this one. When it came to this 2 pips deep, I'm waiting for a 2 pip down move, and then I'm start coming underneath it, 2 pips away from the current price, and it's going to wait 5 more minutes. Okay, so now it would be like it would look like this. Okay, in other words, it qualified, but it would probably be tighter because it's such a drift down that I would rewrite this script so that we would get in every 1/10 of a pip down. So here's getting down 2.2 pips deep. The next one would be 2.4 pips deep. Right, a 1/5 of a pip away each time. Just super tight. The stop would have to be tightened up a little bit on some of these. Now, one of these could just get a super tight stop, kind of wide stop, wider. Here it's very soft thing. Not very soft, actually. It's kind of hardish because they're really close together. And here's the kind of greedy, but it's you got to stop here, and you're making a little bit better. If you put the spread in there, it's break even. This next one is going to be, let's see, this next one is going to be so here's a scalp. I'm just kind of picturing the trade I would do at the market, pick up dropping. And the market has to drop on this one particularly 11.1 pips in 15 minutes after you double click it. On the 5-minute chart, if the robot's looking at the 5-minute chart for the criteria to get in, so you'd have to describe the criteria above here. This is very clean, except for this play sound thing, which I have not engaged that yet. I guess I could sell that. I could sell you dropping these limits. So like I said, if you're blind, for blind people, could trade on a platform like this, because if the market, if you wanted to pull the trigger, that's why the robot does so well, because it doesn't care. I mean, you're not looking at the chart, you just hear a signal that the market, or you have a robot that calls out the prices. I'm sure you could build one of those. 15 pip drop on the 1 hour chart. So every hour, some robot would call out, or it would just launch on a criteria of drops 20 to 25 pips in the next hour on closing prices, then launch maybe a 10K. So you just keep adding these tickets up, and it's going to put a rack in there based on the criteria, and then you have to build about 50 of these. Okay, 50. It's a lot of work, but yeah, that's what I kind of want to do, because I think this computer can handle it. The other computer, I was running robots. Maybe it's the bandwidth of the connection, because, oh my God, I put 20 robots to work on an MT4 platform in the old computer, and I couldn't shut down the platform. I couldn't even move charts around. The thing was just choking. I'm like, yeah, but it's taking every tick. Each robot's looking at every tick, regardless of what So that could be a problem. I have to run it on a cloud because if you have 100 robots looking at every tick, waiting for a certain criteria, so I might have to start off with just a 10K bot. Well, that would be in the market series bots. Now, the limit series bots would be another, I guess we'd have to do 50K there. So 50K in limits bots and at the market bots, just keep that 20% of that, 20% of 100%. We do that for the, what time is it? It's hammer time. Okay, we're just buying this thing, buying this euro dollar. Stupid swing trade. Yeah, stupid swing traders. Okay, so it's a lot of fun though. Now this one I can test. I can make a robot test this scheme in a static manner at the moment. I don't have the criteria bot built yet. I don't know how to do this code, but if you know how to do it, knock yourself out and do it. It should be a piece of cake. People say, "Can you explain that?" I talked to one guy, and he said, "Yeah, I can build a robot. What do you need?" And I described it to him. He says, "Well, that's kind of complicated." Really? Dropped 20 pips in the last hour. Can you buy one at the market? Oh, I don't know. That's gonna be how many days back, dude? It just dropped. I mean, I don't. You figure that out. I swear to God, I talked to some guy. Maybe he's still listening. I doubt it. But I gave him the criteria, and it's like, oh, how many days back are we gonna look, dude? It dropped 20 pips in the last hour. Or does the robot see any completions of in the at the top of the hour? Any candles down 20 pips out there? I mean, really? It's that hard to write that robot? That can't be that difficult. I'm actually gonna. I think I'm gonna do a comedy video and put it on that Upwork thing, and it'd be like, "Hey, anybody out there know what 20 pips is?" Okay, now I need a robot that be buying that shit when it be down 20 pips, pulls the trigger, and after 15 minutes of punishment to the downside. I mean, that cannot be that difficult. Now, the person that's writing the robot would say, that ain't going to work. Oh, but when it does, it works. That's why you need 100 at the market box and maybe, 30, sorry. You want to limit your market bots because that is not a great trade in a sense. Yes, the limit entry is much more better. And when that market is going up 50 pips, I'm going to tell a robot, start selling every 10 pips, 10 pips away, sell a 50 pip range. So it'd be a 5K. Oh, if we just stick to one case. Doesn't really maximize, but we can always do the martingale later. And in that sense, you can write these with, okay, we're going to buy a 4K down here, and now we're going to put on same stop, but the take profit's going to be nice and greedy on that bottom one. We need to have a big winner every now and then, and this one might be just under that size, but it's going to be not so greedy. But I typically make this one the scalp. So this is the 4K with this stop. It is going to be like that because I don't want to hold a big position. Now this one be mid-range. This is a 3K with a modest take profit, and this is going to be a pretty good ratio if you use a hard stop here. It's easier to write the hard stop, and you can see what your profits are going to look like. And a very clean exit take you out of all these tickets, which is 7 plus 3. This is a 10K. If you just go 1, 2, 3, 4K, this would be a 10K rack. Adds up very quick. So this is a 10K, and the robot's dropping this thing. Well, you need another 10K robot that's going to drop when the market goes on fire. This one will not be triggered when the market's screaming down because it's designed around a quiet market. It's only 10 pip, not deep, and with a 15 pip stop. So if 80% of these robots are at least making a little bit of money, it's not a total loss. They technically have 3 winners and 1 loser. And some robots are getting destroyed. But out of the giant basket of all bots that you're running, which is a different metric, I suppose, because the what's the performance of limit bots against market bots running on your platform to see, okay, what is really going on here? And that's where you have to take all those comments of every trade and spill them out into a spreadsheet. Let's see, my comments are turned on here. These are all market orders. So I have mostly market orders on here because I just load this. This is a demo account. I'm going to turn the comment filter on here. Doesn't seem to I guess I didn't write the right comment, so it's not like I should have wrote limit. So they're all buys, of course. Yeah, the market orders are commingled with the limits at the top. Now the winning tickets are limits. They usually are. Here's a winning market order, but mostly limits. And we start losing when we go to the market orders because they overpaid. Here's some buy limits that are kind of not great profit-wise currently at the moment. What are we in here? Like a lot of K right now. Wait. Okay, so about what is that? About 170K or something. Maybe 150K right now on this demo. I'm long the thing. But yeah, I don't think this is worth really selling that. I'd rather be a buyer on this plunge in this area here, really loading up anything below that. And really loading up below here, but the slot is very narrow. And that's maybe why you want to trade 5Ks exclusively on limits, because you get 15K here for that little bounce. Or like me, you're adding to it. I mean, currently in this position, in this situation, because I'm looking at the 4-hour chart. Actually, looking at the daily on this one because this is a monster swing trade going on. Hello. I gotta kind of really zoom out to see it, but we'll go to the daily and zoom in. It's such a nice clean candlesticks are just great on the daily because you could have buy limits here and sell limits here, and you could have made money and dumped out of both at the end of the day. See, and the drama here was non-farm payroll bullshit, probably something like that. Also, if you place orders on the daily, the entry is going to be literally buy anything below the previous day's low and sell anything above. So no fill here, but you got filled here, but no fill on top. Then you put a sell limit here. Again, cancel replace. You get filled, but I think it went up before it went down here because we were looking at the. Let's assume you got crushed. We can't see what happened first here, but we know it wicked up. And if it wicked up, it just a little baby top tick Tommy right here. If Tommy's watching, he's probably like, holy fuck, I bought the breakout here, dude. Like, he was going higher, and I like this day. I was bullish. See, but my robot's selling that shit. It goes, what? Here, my robot sells that, sells that, sells that. It's 100 pips from here to here. So he's selling with a 100 pip stop. Sells a 1K, a 2K, a 3K, 100 pip stop to make 100 pips. Well, the stops are, this one gets stopped out. That's 100 pips. This one does not get stopped out, neither does this one. So if you just went 1K, 2K, 3K, you're prepared to sell at 10K. But now you're short 6K because you did 1, 2, 3. And this one is set to just make a like this much. It's not a very good ratio. Monster stop. You survive it. I'd rather be in a drawdown. That means you're building a position, I hope, because at some point you're gonna make money. And then this one you're selling, and you're gonna make, like I said, the baseline is break even. So if you have your exit here, you sold at the market, you got to stop here. But this is one you really sell it, or it's up big, so you do sell like 28K here because it's up so fucking big. You're like, dude, the daily chart. So you got all day to decide this trade. Now, the no nonsense guy, his head would explode if he saw what I was talking about. I don't think building a position was what that guy was into. It was like that. It was like a guy who trained you for the prop house, you know. I'm waiting for a pullback of 618. Let me see if I can find it on the chart there. Yeah, now you gotta show you the Fibonacci trade. But it's just too much. On the daily, you'd really have to risk. Okay, you could do it. You could claim Fibonacciologist. Geez, no, not a lot. There's low frequency trader though, because I don't see any trades on here really for the fib. I guess if you do it on closing prices, you might be able to do it. Let's see. We closed down. Lowest low. Now go up to the highest close. So here you didn't get filled. You had a buy limit here that was 618 right here. Now this, let's see, we get a big rally. So leave your Fibonacci tool starting here on closing prices. Go all the way up to the highest high. Now 618 is probably about right here. And this is why people use Fibonacci. But I can fucking tell you, there's no way I am waiting for this fucking shit. It's not gonna happen. I'm simply gonna buy this motherfucking pullback and go, holy shit. I'm out. Take out Top Tick Tommy. You can only make this many pips on that. Sell at the market. Sell at the market. Sell at the market. Here. Now this is going to be a bad trade if you do this crude system. You bought this one, you bought that one, you bought this one, you bought that one, you bought that one. So this one you have to have a wide enough stop to survive this news event to even make this. It's about as good as it gets. You're hoping for this, but it doesn't happen. Or that's the typical scenario that takes this out, comes back, and retests. But this is such a brutal sell-off. Stepping in. But I said I'd rather trade the wick. So the wick trade is going to be the highest high of the previous day. You just have to sell into it. Now here you would have got, with that crude rule, you would get creamed in the thrusting up trades. But you're accepting that. You know that that's the fate of that kind of super aggressive, where you're not taking into account the vacuum that you see before you. You know, you really have to see it to be careful of it. Because in this situation here, where the market is starting off on the left side of the chart, it's down a little bit. It's really down. Holy shit, it is really down hard. Down 4 fucking days. Dead cat bounce. One last day. It's like a perfect completion of a ABC wave. On closing, if I turn the closing prices on, it'd just be perfect fucking spinning top. It's just amazing classic shit. Now, it is true. And I've talked about this. This is the third choice. Not a fan. I don't like to do it, but people do this trade all the time. This is the classic goober entry, which makes money. A ton here on this particular pattern. You know you want to buy the pullback. You're not waiting for the 618. So you start trailing stops, buy stop, cancel replace, double the ticket, 2K buy stop, 3K buy stop, 4K buy stop. What's after 5? 6K, 7K buy stop filled. How tight is the stop for this ticket, by the way? It kind of has to tighten up a little bit, right? Because you're expecting this explosion to come, right? You want to be confirmed that it made a higher high and looks like it might be turning around. Now you might get stopped out of that. I don't know where your stop is on that, and you might have a you wouldn't make anything unless you have your take profit set to make like 2 pips here, which is crazy to put a buy stop here. So that trade I wouldn't do. But you cancel replace. You stay with the program. If you stay with this program, you'd have to start over at 1K, 2K, but you're only going to get filled down to 3K. So that's no good. Or the other option was, and I've seen people do this, and I was with a person, I was talking to somebody that wanted to do that. You can't believe what people want to do, right? Because I'm like, I would never do that. But he wanted to put a buy stop not at the high of the day. And in this case, he would be right. He would do better. Buy stop 10 pips above the previous, 20 pips above the previous day. Buy stop 20 pips above the previous day. Here, buy stop above, 20 pips. He doesn't get filled here. Then he's got a buy stop here. And these tickets are getting bigger, just like the ones I just said. 1, 2, 3, 4, 5. Buy stop here. Buy stop here. I'm sorry, fuck, I fucked it up. I can't seem to pick the exact distance away. I'm like retarded here, but I'm trying to figure. This is 20 pips away. 20 pips. So 20 pips. I gotta stare at this thing. 20 pips. 20 pips away. These buy stops are getting bigger. The tickets are getting bigger. This is the great trade here. This is where getting in, and it's hard to believe these are, but these are winning trades. It's terrible fill, kind of high risk. Buy stop here. 20 pips from current price. Actually, here 20 pips from current price off the high. Here's 20 pips. So I was putting too far away there. Here you have a buy stop. I guess as soon as it makes a higher high, as soon as you get filled, what about that? Is that your will you turn the thing off? I'm not getting any more. So your trailing entry, and they finally get triggered. But this is your buy stop entry, and you're getting filled on buy limits. You never trade at the market. But I think the best is I wouldn't do the buy stop. I don't like it. But I like to do buy at the market, buy at the market, buy at the market. It's crushing in the limits, so I'm getting filled because it's covering an area. And when I see a big down move, I would buy. Big down move, buy. Big down move, buy. What's the correct? This is about 35 pips down. Buy. And maybe you don't, if it just only, like this one, maybe it's not down enough. I would definitely put a criteria that unless it's down 20 pips, I'm not buying. This one's down nearly 100. 95 pips down, buy. Big ass stop. Maybe down here at 100 pips. Trying to make 100 pips, so when it gets to here, you're cashing out. Here you probably do better with the range trading, the limits. Sell new high, buy new low. It doesn't happen. You sold this though. Let's hope you got out of something. This one's a great fill on sell limits, buy limits. No fill on the sell limit. And this is when the buy stop bot gets his ass clobbered. So you see the chop will kill the breakout bot. Breakout bot is confirmation of entry and buy stop here. Like it's fucking ripped. It fills both those and just gets chopped to pieces. Fills on this buy stop. Fills on this sell stop. Gets his ass handed to it here. Here it makes money. Cancel replace. You're getting it 5 pips away. Kerplunk. That's a winning trade. Hope you got the fuck out on the way to this. And here comes the buy stop bots back on the other side. Here's the trailing buy stop. Blue line shows that really good. We're getting very tight ranges here. We're underneath the floor. This was the last known range until it expanded here, and I'm just going to show the blue line was it. Definitely selling this thing if it goes up here. I'm cashing out into the closing price of that doji, the spinning top, also the floor on wicks. So the next 40 pips I'm out. I'm phasing out into the opening of Europe. And then when the jobs report comes on, I'm going to throw some tickets in, probably on the buy side, typically on the euro. I mean, typically on the buy side, but it could be the yen. And that's how we play it. It's the canvas, the area with the buy limits here, sell limits up here. Now, would on the precision hand drops here, suppose a double click. It'll look like this. I'll use the let's see. Oh, let's go to the 1 hour chart. So here's the only pullback on the 1 hour chart. Look at this thing. One pullback here is splendid trade here for the market bot. Look at these are actually bullish little baby candles. But here's the tipping point. Now here is we are really looking for this thing to pop through on the 1 hour chart. By the time London opens, I'll be cashing out into this. Sure, you could put a buy stop here, get filled and make money, but you know, you could donate it back here. But buy stop here, buy stops, just keep getting longer and longer, but then you're going to paint yourself into a corner at some point, especially if you don't take profits and all that. You know how that goes. These are killer buys on the 15. And look how that just, you could have cashed out. This is Top Tick Tommy. That 50-minute robot is brilliant here. Buys, cashes out. Stop could be here, break even. Be down here somewhere. How often does that pattern? So you have pattern particular bots that are only invoked when the market does these kind of things. They're triggered, they come on the scene, they do the trade. But they're going to be wrong sometimes. So you sell them here, maybe running the thing in a hedge. You would, if you ran all 3 styles of entry, you're maybe still long from here. You know, when it made higher highs, you get picked up, or you're cashing out because it is screaming up. Definitely dumping the whole. If I was in really big down here because I got in below this 15-minute hammer, I just loaded the fucking wagon here, and every time it closed below that, I would buy heavy. I wouldn't expect the robot to see that structure, so the crude bot would just buy here and here, but I can see this. I have my limits in this pocket, and then I would have my, I see that, the 15. Presupposing I hang around to watch this, babysit it a little bit, check it on the market. Certainly having an alarm go off I mean, this idea, the robot's just going to do it instead of the alarm, and then you have to go pull the trigger. It's just going to come in there. On the 15, there's some, you know, great trades here. There's a dead cat bouncer. You buying here, but you got to get out. You're expecting it to come back here, not quite. Big down buys. Try about selling small ups with a tight stop with a big take profit. You can trade them both at the same time. You're not going to, like this is the best buy on the chart. This one you take a little bit of punishment to make this if you can. Here's another killer. So these big killer, almost 20 pips in 15 minutes down, half hour down. But I'm liking it to buy here heavy. Buying below this heavy. Unless you get stopped out. That's why you got to come back in below this. This pocket heavy. This is the money maker on limits. If you can handle building a position, you have to run about 150 pips stop to make money on this trade, I suppose. You bought here, you bought here, you bought here. Now this is currently up a little bit. You bought here, you really loaded up. You're really buying heavy on the big down 15. Here you just really went all out. But that's the place that the limits are getting filled, so, it's really going to be, you're going to be very big into this position. You bought this, plus you were buying that outlier, and you bought heavy below this triple bottom, and you got filled there. Now you could have dumped that 20. I would definitely have the 10 pip targets. So I probably took something off here. That's why you want that limit, that market bot coming in and doing some of that. So you have a real wide spectrum. That's why I'm not going to trade the buy stop bot, because I'm already in so heavy here. Putting buy stops here and like adding to that is just to me it's just chasing. It's so fucking stupid. My own personal opinion. What about this back here? It would have been a winner. Yeah, I know, but dude, you cannot do it like that. Look at this beautiful triangle. 15 is very lifestyle friendly, because every 15 minutes, somebody's having a beer somewhere in the world. So another angel is born. So by the same thing here, we got the sell limits. That's double tick. You're selling limits here maybe. As they keep shearing off, the blue line's getting crushed into this. I definitely want to be getting out of something here. That's why I always want to scale out. That's the last known kind of floor this thing plunged in. It's like a turtle soup pattern here. You're not allowed to say turtle soup or harmonic pattern trading. What is it, harmonica? It's tough. I don't know. God, look at these beautiful 15-minute. Let's go to half-hour bot. Checking out our trusty half-hour candles. You know the ones. Most romantic. They get more. The longer the time frame, the more romantic the candle is, because very profound candles. We don't just let anybody trade these patterns, The exchange watches you now. Make sure you behave. That's a 1 hour chart, sorry. 4 hour chart. Low frequency traders. Are you a low frequency trader? Would you like to trade more than Ralph down the street? Call our 800 number. How to speed up your trading. It comes with a packet of free pills. Oh yeah, those stimulant trading. Yeah, I'm wired. How about you? I'm ready to trade. Oh, market closed. Asian session. Market closed. You no trade. Oh, I know. Fall asleep watching Snorex shit here. All right, what are we going to do there? So we had the 4 hour chart. Let's see if we call it the magnificent, insane candles here. Look at this. This is the perfect top tick Tommy meets screaming fucking 4 hour up bar. Holy fuck. So we sell here at the limits and we sell at the market. How'd that work out? That's not no nonsense shit there. So that's and we had the buy side of that. You had to be willing to take. So here the punishment is very small. Here it's huge. If you're going to buy below that, 40 pips, almost 50 pips of filling on limits. Buy at the market, buy at the market. I would put 50K in there. Then we've got the other side of the coin, the buy. Buying this, hoping for more up. You don't get it, loser. Buy here, tight stop, buy. Here you make money, but then they wash you out. But that's okay. Because you got big ass fucking limits down here. That's just how you have to do it. It's very consuming, you know, to really trade every, and I can trade every pattern on here. I mean, I know exactly what I'm doing, what trade I want to be in, and what trade I would place orders right now. Buy limits. If I wasn't in, I'm buying here heavy below the blue line of the last bar. That's starting point. Big ass buys down here and fucking enormous buys down here, which is about 50 to 60 pips deep from current price. And it's about, the trigger point is the pips. So if you have buy limits here, just a ton here. Now on my system, unfortunately, I probably won't be in that big here because I really want to trade on the crush into this void. Get in here, heavy, heavy, heavy. Because I'm not going to put a big ticket here because it rarely happens, but that's a genius trade, right? I'll get into a drawdown, build a position alongside because when it does this, it probably already cashed out before it got to this bullish candle. But it never took this out. It wasn't like, let's get in here because I think it's going to do this. And I'm sure some people did. And they loaded the wagon and then it went wah, and it broke down. So I've been buying this all week. It's a fucking chronic campaign of just keep buying it. And when it went below here, I was like, of course, that's the best place to get in. But you don't always get that. And then how big is the ticket? How much you got in that? How many times do you do that trade? Do you do it all the time? Zoom out, 4-hour chart. So this is a whole different picture. Very costly in pip terms. Certainly worth it in rewards. Okay, 4-hour chart. This is a losing trade. Screaming up, you sell. And why would you not sell there? Why is that the dumbest fucking trade? You have to respect this vacuum and leave room for it. Because why is it ripping up? The more you zoom out, you more see, well, I get it now. I see what you're saying. Yeah. Look at this fucking hole on the north side. Here's the southern hole, the southern vacuum. But are you willing to put, if you had to trade this one to make money, you got to get in like about 10 pips apart. This one you have to get in, oh my God, like 20 pips apart to do the same size trade. Maybe 30 pips apart. You'd buy here, buy here, buy here, buy here. Big ass. To survive this, the drawdown in here is going to be 250 pips possibly. I put a 250 pip stop on that. It's $25 on that ticket. Comes down, comes down. This is an example of this system working. You got the same stop on each one of these buy limits. They're 20 pips apart. You hold the whole fucking thing until the top takes Tommy's his ticker gets well, actually you're not going to get it. That's why you got to scale out. He never takes out this high. You cash out. Just cash out like you cashed in. You bought on limits here, your first limit entry, maybe this one. You do hold it to there. With a 300 pip stop, you could let this whole thing fill up, down 2 weeks, up 1 week. Well, in the middle of the week here, we're going down 2 weeks. Huge fucking, look at this rip here. Wow. Everything's below that wick. Huge buy. And it makes this, if you started buying here. If you start buying here, but if you're scaling in every 20 pips, it's a lot of money eventually. So this was the obvious buy this week to buy all this crap. And maybe you're going to dump the whole fucking thing right here. It's certainly the place to do it from the last known blue line that we have. But now, a nice quiet. We're waiting for in 2 hours or an hour and 45 minutes. We'll be right here, and we'll be a nice quiet zone. And then what are we going to crush down here or crush up there? But to me, that's the entry. But buy here, sell up here, and then just that's the middle of the week. MetaTrader should really have the end of the week here. If you go to the 1 hour chart, you see the proper. So the trick here is to, if you want to see it all perfect, so people get this exacting situation, you take this and make 1 hour chart and then find the vertical line and mark it here on the daily. Then go to the 4 hour chart. Right, so the end of the week or the end of the that's not right. No, I was messing with that earlier. So I had it where I could sync it up. So this is a 4 hour chart. I was trying to get the end of the. We'd have to space this out in advance. So this is the only way to do it. Now that was on the history charts I was looking at. So we know this is 1 day. So to do in the future, you have to do this. Okay, this is so this is Thursday. This is Friday. So the end of the week is here. Oh, I fucked that up. Wait. Kind of screwed that up a little bit. I want to make this column of possible prices on the up and down side. Okay, so that's exactly the end of the week. So where can we get to here? Can we predict the price at the end of the week? Is it going to, I'm going to put this right in the middle of current price now. Where could we get to? And the week's coming. I'm just going to do a free-handed scenario. All right, so maybe we are going to make it back to here. Is that going to be possible by the end of the week? If I put buy limits in right now for the rest of the week, this will be in my buy zone. So when the market comes down, say it does do this, I'm going to just, I got to scalp out of something there. And maybe I hold it to here, and that's all I do is 20 pips for this day. Kind of fizzles. All sorts of shit can happen. I had an indicator that would project all the possibilities off current price, and that looks like a possible scenario. They end up here at this previous floor, pretty big deal, triple bottom there in wicks, and yeah, I can see the market, weaseling up to here by the end of the thing, or it weasels to here, maybe ends up in some weird spot here. But I'm definitely got the buy limits pending under this. But since I'm already long, I'll start cashing out when it clears out this thing to here. But that's the current plan. That's where I'm at on this this situation currently. And let's go back to I gotta go back and watch some of these movies. They're just so ridiculous. I'm going into the 60s and 70s muscle car movies. Stuff is crazy. Very just raw. No CGI. Just Jimmy Bob in his truck. Jimmy Bob was trading on his tablet. Got hit by a cement mixer. Sorry thing. Happens to the best. Happens to the rest. Alrighty then. Back to the low IQ entertainment world.